Okay, liberty loving friends, good evening. We have tonight the opportunity to speak about something that probably not everybody is aware of, but we are all aware about the income taxes and how the income taxes not all the time they're fair. Steve is the person that is going to talk to us about a new proposal that he has put together with other people, I presume, to replace the income tax with a more fair, apparently, retail tax that will basically cover the whole United States. Steve, do you want to tell us, can you tell us a little bit about it, especially to people like me that is not very familiar with the subject?
Of course. This is a plan that has been around for 30 years. It's evolved into what it is now, which is called the fair tax, which is a tax that will replace the U.S. federal income tax, both individual and corporate, and the estate and gift taxes, and very importantly, the way that Social Security is now funded through a payroll tax. So what will happen is we get rid of all of those types of taxes, and we instead have a single retail sales tax on new goods and retail services with a tax credit, it's called a prebate, that allows a family of four, for example, to buy up to $32,000 of retail goods and services, new goods and services, without paying any tax. So it's basically starts at $32,000 for that family of four, and over that they'll pay a 23% retail sales tax. Now, they don't have to keep a record of it. They don't have to file a tax return. All they do is when they go make purchases, they pay the tax at the time of the purchase. But they get all of their paycheck. They don't have to pay any taxes out of their paycheck, so they get 100%, which for a lot of people is a more than 23% raise when you calculate how much they're paying in Social Security taxes and payroll taxes, basically with Medicare, and how much they're paying in income tax. So we get rid of all of that, you get all your paycheck, and then you will decide how much tax you're going to pay by how much you spent. Now, the other thing that's very important to look at is that it's on new goods. So for example, if you go out and buy a car, and Fabrizio goes out and buys a car, and you both look at it and you say, well, you know, I'm very happy to buy a year-old car, a used car. And Fabrizio says, nope, I'm going a new car. I want that new car smell. Well, he's going to pay the fair tax because it's on new goods. You're not going to pay it because it's already been paid. So on used goods, we do not charge it, only on new goods. So by the way you make your choices, you will have some control over the amount of tax you pay. There's a bill in Congress. We've had 70 co-sponsors in the House of Representatives. And basically, it's all on hold now because of the election and because we don't know who's going to be the president next year, nor do we know who's going to be in charge of Congress. We do know that if President Trump is reelected, that he likes this proposal, he likes the fair tax, and we have some optimism that he will take it up and look at it and hopefully will actually start promoting it. If Mr. Biden is the president, then he, I think, will look at it, but he will not be as much in favor because he really likes the income tax, because the income tax allows him to punish the people that he doesn't like by raising their taxes. and reward people he likes by lowering their taxes. So, you know, it's a philosophical point, and depending on who gets in, we'll see how it goes. But honestly, it doesn't really matter because the present income tax system is coming apart in terms of collections to the government. There are presently anywhere from, the IRS says 600 billion a year, others say 900 billion a year of income taxes which would be owed, which have not been paid because people have chosen to either not report the money as they should, or create fiction deductions, meaning, you know, say I spend $12,000 a year on renting an office when they really are talking about a room in their apartment. So they create a deduction that doesn't exist, and therefore they save taxes. So it's hundreds of billions of dollars a year. And frankly, it's becoming a crisis for the government because people are evading it. Now you look at the sales tax. How are they going to evade the sales tax? If they go to Amazon and buy something, Amazon isn't going to ship it to you, although if you don't give them the tax. You go to a place like Walmart, they're only going to sell it to you if you pay the tax. So the collection points become very much fewer. Less than 10% actually will be collecting the tax of retail outlets. And most of those people are so big that if they make a mistake and don't pay the right tax, it is a mistake. It's not evasion. So evasion is going to go way down. The government will get their revenue. All of us will have the choice of how much tax we pay. And the nice part of it is that we don't have to file any returns. We don't have to report how much income we made. We don't have to worry that somebody's going to come and see us 2 years from now and say, Mauricio, you didn't calculate that correctly. You now owe us $30,000. All of that's gone. We pay our tax when we make the purchases.
Okay, well, from my point of view, I strongly believe in the Constitution of the United States, and I believe that the 16th Amendment, when the tax was started, it wasn't really very cleanly done, and there are people that they are also saying that they did not have the 3/4 of the state that they were supposed to agree upon it, so that it could be actually become an amendment, you know, the 16th Amendment. So yours proposal, to me, it would sound great, but I got a couple of questions.
Sure.
Steve, you said that the first $32,000, they are tax-free. Did I understood that correctly?
That's for a family of 4.
Okay.
Depending on the family size, it depends on how much is free, you know, is not being taxed.
So meaning, but you also said that you don't have to keep record. So how would I, right, so how could I, as a father of 2 children, a family of 4, know when actually the tax need to be? Are you saying that I'm going to pay taxes all along to Walmart, like you suggested, or Amazon, right?
Yes.
And then at the end of the year, I'm going to receive something like a credit from the federal government?
No, it's actually a little simpler. It's going to be administered by the Social Security Administration. And what you're going to do is you're going to file a form. And on that form, you're going to list the number of people in your household. And those people all have to have a valid Social Security number. They can't have a fake one. They have to have one in order to qualify. So each year, you will fill out a form. It'll be online, but you'll fill out a form and you'll say, I have 4 people in my household. I have my wife, myself, and my 2 children. Here are their names. Here are their Social Security numbers. And then what happens is each year, it's recalculated again, you will get a check each month for 1/12 of the amount you're credited. For example, if you're going to have $32,000, let's say that's $2,600 a month of spending. It's a little more than that, but let's say that. You're going to get a check or amount credited to your account equal to the tax on that of about $600. So you'll have it the first of every month. So when you go out and spend, you're going to pay the full amount of the tax on whatever you buy, but the first $2,600, you'll have already received the tax for that.
So basically, Steve, if I understand correctly, if that month, instead of spending the $2,600 more or less like you suggested, I only spend $1,000, I would receive more money that actually I have spent, and then later, as I spend more, I will be basically covering up the gap between those
right.
months. Okay.
Yeah, it's your choice. I mean, you're going to receive, in my example, $7,200 in credits.
Okay.
And you're going to, and that's based on the 32,000 plus, whatever of spending. If you don't spend the 32,000, or if you choose to spend half of it on new goods and services and half on used, then what happens is that you end up with a plus to your account of half of that credit, or $3,600. But it's up to you.
Yeah, sounds pretty good. So like if somebody chooses to buy used merchandise, except for the services, of course, they're going to be taxed at the full amount, the 23%, like you suggested, like you said, then basically it can avoid the tax altogether on new goods. I mean, on the cars, like you were saying before.
Yes, on used goods, you're not going to pay tax at all. So if you go out and buy a used home, you're going to pay a tax. But under the present system, because you're going to have to earn the money, pay the taxes out of your check, and use what's left to make payments on the home. Under the fair tax, you're going to get all of your check, but when you go make payments on that used home, there's no tax added. So you're paying 100% payments. Because what most people really don't look at, because our government has been very successful with withholding of making us forget this. But I can ask you, like, how much do you have to earn in order to have $1 left to make a purchase? For most of us, it's $1.20, $1.30, because we take away the payroll tax, we take away the income tax before we get our dollar. So there's already a tax being withheld on spending, because we had 100 cents and they took away 25 cents. So we only have 75 cents left to spend. So our consumption has been reduced by 25%. Does that make sense?
Yes, definitely makes sense.
And so what we're doing is we're saying you're going to get 100% of your money, and then you're going to make a decision as to how much of that is going to, what you buy is going to be taxable. Because right now, if you have $1,000 mortgage payment, you may have to make $1,500 to pay it before you net out your taxes and then have the net.
Yes.
Under the fair tax, you have $1,000 payment, you're paying $1,000. Period. If it's a used house. So it's a huge shift in the way people have control over their own income and their own spending. And that's, I think, something that's very horrifying to a lot of the bureaucrats who want to control how we spend our money, what we spend it on, and they want to reward people who are their friends, and they want to penalize others who aren't their friends. And we take that away with the sales tax, because everybody is treated the same. The difference is only that the government doesn't have a chance to tell you, Paulo or Fabrizio, if you buy this, we're going to let you pay a little bit less because we're going to let you have some taxes back. But if you buy this over here, we're not going to let you do that. So we want you to buy this. In other words, I can just see, particularly if some of the people around Vice President Biden get in power, if you go out and you buy sugar-free drinks that do not, that are, stevia sweetened, we're going to let you not pay as much tax. But if you don't buy those, we're going to make you pay more. Well, you can't do that with a sales tax because the sales tax is even across the board. So you take away that control. And honestly, that plus the fact that right now, if I ask you, and I said there's going to be a $100,000 missile developed, which is nothing, of course, that's going to be used in a battle. How much of your taxes, what percentage of the money you paid in tax went to it? Nobody could figure it out.
That's right. How do we know?
Nobody could see it. But if we had a fair tax and we knew that in order to pay for things, it's a percentage of the fair tax. Now, it might be, it would be a tiny, tiny percentage, but we could do it on a napkin, with our smartphone, calculate it out. And again, the bureaucrats don't like that because we now see, not only we, but every single American makes purchases. They don't all pay tax, but they all make purchases. So now they're going to see the cost of their government every time they make a purchase. And that is something that scares them to death. But look how liberating it is for the rest of us. We now know how much it costs to run the government. We now can say to them, if you cut A, B, C, D, instead of 23%, you can charge us 22%. Very simple. And it's very hard for any of them to dodge around it because it's so simple. And that's the reason why there are so many people objecting in Washington to it. There's two kinds of people who like the fair tax. And those two kinds are men and women who live outside of Washington, D.C. Everybody likes it, except the people in Washington, D.C. who profit off of the income tax. So that's really a quick examination of it. It's got lots of other benefits in terms of trade, in terms of ways in which companies operate, because they no longer have to be operating worried about taxes. They can be operating worried only about what makes the most sense for the company and their employees.
You mentioned. I got two questions really, Steve, and then the time is up. But I would appreciate if you could say something about this. You mentioned trade. So if somebody buys stuff from abroad, I guess those 23. Like if I build something, and I'm going to export whatever the goods that I produce. Am I supposed to pay the same 23%?
Nope.
Okay, because that would be unfair for.
No, only for retail purchase in the U.S. So all exports would not bear any tax. Whereas today, our exports bear all of the taxes from the income tax and payroll tax. Whereas in Italy, when they ship something over here, they get the value-added tax they paid rebated at the border. In other words, they get it back. So it comes over here 15 to 18% cheaper than it is in Italy. And when we send something from, you do the export from here and you send it to Italy, what happens? You carry the cost of the U.S. tax, which is 18 to 20%, increase in the price. And you get to Italy, and what does Italy do? They add on their goods and services tax or their value-added tax.
Yeah.
So you
They have
are
the duties,
unfairly
import duties,
competing
yes.
with Italy. And whereas when Italy exports over here, they're getting a 10 to 20% benefit in terms of what they can sell for and make the same profit.
Good. And the last question was like, I'm sure that you have an idea more or less. We are talking about an average family of four. With the current system and the system, Steve, that you are proposing, which makes a lot of sense to me, what would be the average savings in taxes that a household basically at the end of the year would keep instead of spending?
Well, see, that's the thing that's interesting. It depends on how they spend their money. Because if they go out and spend all new things every dime they make, they may pay as much or maybe even a little bit more than they're paying today. But they can choose to do it differently by how they spend their money. If they go buy a used house, they're not going to pay tax on that. And so the amount of tax that that family is going to pay is going to be less than they're paying today. But it's a choice that's personal. And frankly, for most very low income people, it's a benefit of maybe, $150 a month that they save. But as the income goes up, the savings are totally dependent on how much they spend on new goods and retail services.
And basically with your system, with the system that you are proposing, we wouldn't have to worry about the IRS anymore.
No, they're gone.
Yeah.
The only thing that you have to do is enjoy the day.
Yeah, I think that just for that, people should consider it and should go for it. Definitely.
Well, I appreciate it. If people want more information, I'm sorry, I do have to run. They can go to fairtax.org. It's FAIR tax.org. And you can get a lot of information about this. We would love for you to join us. We have people who contribute, people that just want to get our newsletters. But the entire idea is to free America from the income tax and put in a very sane tax system that will make us much more prosperous going forward. I really appreciate the opportunity to talk to you.
Thank you very much, Steve. We do the same. Have a good evening.
Thank you, and you the same. All right.